Welcome to the deep dive. Today, we're going to take a closer look at something that's, well, really reshaping the financial world: neobanking.
Mm-hmm.
Now, if you're thinking, what is neobanking exactly? It's basically these digital-first financial services. They operate completely online, no physical branches.
Right. Leveraging tech for a, more nimble, user-focused experience.
Exactly. Often with lower fees, some pretty innovative features. We've got a load of insights here from cognitive market research, and our mission really is to unpack these big projections for the global neobanking market.
Yeah.
Consider this your shortcut to understanding a financial landscape that's just expanding, well, incredibly fast.
And understanding this now is so important, isn't it? Because we're not just talking about some small niche anymore.
Not at all.
This rapid change, it really signals a huge shift in finance. One that could genuinely impact how all of us bank, save, manage money day to day. It's like a total reimagining of financial services.
Okay, so let's dive right into that global picture then. Get the big numbers out.
Let's do it.
Back in 2021, the global neobanking market, it was valued at about $24.3 billion.
Okay.
But here's where it gets, well, pretty eye-opening, that figure. Projected to surge to nearly $127 billion by 2025.
Wow. In just 4 years.
Yeah. And then looking out to 2033, we're talking a projected $3.45 trillion.
Really? Okay, that's massive.
It's huge, and it's growing at a compound annual growth rate, the CAGR, of over 51%.
Right. And, putting that 51% CAGR in perspective, that's not just fast growth. It's almost exponential. It's accelerating.
Yeah.
Think of it less like banking just growing and more like the whole financial system being, well, fundamentally rebuilt from the ground up, really, designed for the mobile first generation. This isn't just a small tweak. It's a clear sign that neobanks are filling a real gap, offering agility, lower costs, maybe a better user experience than some traditional banks can manage.
Right, they're hitting a nerve. So with that incredible global trend in mind, let's maybe zoom in a bit. North America. This region was valued at just under $6 billion back in 2021, expected to hit over $30 billion by 2025.
Still huge growth.
Yeah, and then skyrocket to nearly $776 billion by 2033. So it's been hitting a really strong CAGR, too, over 50%.
Okay.
And the United States, well, as you'd probably guess, it's driving a lot of this, really accounting for the lion's share of that growth.
Right.
The U.S. alone goes from about $4.75 billion in 2021 to a projected $613.5 billion by 2033.
Wow.
But, beyond just the market size, what are the specific things pushing this in the U.S.? And how do Canada and Mexico fit into this picture? Their growth seems pretty significant, too.
Yeah, that's a great point. In the U.S., it's kind of a mix, right? You've got a very tech-savvy population, huge amounts of venture capital pouring in, fueling innovation, and a regulatory environment that, okay, it's complex, but it does allow these digital challengers to grow.
Right.
For Canada and Mexico, the story often includes a big push for greater financial inclusion. Neobanks can reach people maybe underserved by traditional banks, or they just offer more competitive, easier-to-use options for folks tired of the old systems. So strong growth across all three really shows, broad acceptance. They're becoming part of the financial ecosystem.
Makes sense. Okay, so from the Americas, let's pivot over to Europe, a continent with, centuries of banking history, but now really jumping on digital innovation.
Yeah, definitely.
Their market was valued around $7.4 billion in 2021, projected to hit nearly $38 billion by 2025.
Okay.
And then soaring to over $1 trillion by 2033. Their CAGR is also solid, just over 50%. 50.68%.
Another $1 trillion projection?
Yeah. And we're seeing, powerhouses like the UK and Germany really leading, the UK growing from about $1.1 billion to over $160 billion by 2033. Germany's got a particularly strong CAGR, actually over 51.5%, going from $1.7 billion to nearly $248 billion.
Wow.
But it's not just them. France, Italy, Spain. Spain's projected to hit almost $80 billion by 2033. And even smaller markets like Sweden, Denmark, Switzerland, Luxembourg. Luxembourg's growth is pretty amazing, from $74 million to over $8.7 billion.
Europe is really interested in such a patchwork.
Yeah.
The UK and Germany are clearly out front. That's partly down to having these established fintech hubs, right? High digital adoption, maybe less resistance to new models.
Yeah.
Germany's strong CAGR, that suggests a real appetite for these digital options. But what's really telling across Europe is that this appeal isn't just in the big economies. The growth everywhere, even tiny Luxembourg rocketing up like that, It shows these services are adapting well to different local needs, different rules across the continent. It seems accessibility and convenience are just valued everywhere.
Good point. Okay, let's shift gears again. Asia Pacific recorded over $6.6 billion in 2021.
Okay, similar starting point to Europe.
Yeah, roughly. Expected to grow to nearly $36 billion by 2025, and then will absolutely explode to over $1 trillion by 2033. Another one.
Another one. And the CAGR.
Impressive. Over 52%. 52.334% to be exact.
So the fastest regional growth rate we've seen so far.
Just slightly, yeah.
Right.
Now, China's huge market makes it a massive contributor, obviously, growing from just under $2 billion to over $311 billion.
Makes sense.
But the real standout here, I think, is India, showing the fastest growth within the region, incredible CAGR of almost 53.5%.
India, wow.
From under $1 billion in 2021 to over $166 billion by 2033. So what's fueling that kind of expansion in India specifically? And what's the bigger picture for Asia Pacific?
India's growth is, really striking. It's like a perfect storm.
Yeah.
Massive mobile phone use, a very young tech-comfortable population.
Right.
And government pushes, like the India Stack, which basically creates this digital public infrastructure and makes digital payments and financial services super accessible. So it's just fertile ground for neobanks offering easy, low-cost digital options. And the overall significance of Asia Pacific, you just can't overstate it.
Yeah.
Huge population, rising digital use. It's really poised to become a dominant force globally, potentially even overtaking other regions in sheer volume and maybe even innovation as people kind of leapfrog the old banking infrastructure.
That leapfrogging idea is key, isn't it?
Yeah.
Okay, next up, South America. This market valued at about $2.1 billion in 2021.
Right.
Expected to grow to over $11 billion in 2025, reaching nearly $308 billion by 2033. AGR, again, over 51%.
Consistent growth rates across the board, it seems.
It really is. Brazil's clearly leading the charge here, projected to hit over $830 billion by 2033. But Argentina, Colombia, Peru, Chile are all growing too. Chile alone going from $182 million to over $27 billion.
Yeah.
So what are the specific drivers down there? How does the neobank model really serve South America's needs?
South America is a fantastic example of neobanks filling real market gaps.
Okay.
You often have large populations who are, unbanked or underbanked. They just don't have access to traditional banking.
Right, a big issue.
Exactly. Combine that with really high mobile phone penetration and boom, perfect conditions for digital-first solutions. Neobanks offer accessible, cheap, easy-to-use digital alternatives. Basic services, sending money, sometimes even, ways to handle inflation digitally.
Interesting.
So the rapid adoption we're seeing really reflects this urgent need for basic, reliable financial tools.
Makes a lot of sense. Okay, now let's turn to the Middle East. Its market was just over $1.3 billion in 2021.
Okay, smaller start.
Smaller start, yeah. But set to reach an impressive $190 billion by 2033, growing at over 51% CAGR.
Still that strong growth rate.
Absolutely. Countries like Saudi Arabia, Turkey, UAE, Egypt, Qatar, all showing rising adoption. The UAE, in particular, projected for significant growth with a CAGR over 52%.
Right. And what's really fascinating about the Middle East is how quickly some of these economies are grabbing onto digital finance.
Yeah. Why is that?
Often it's driven by forward-thinking government plans, trying to diversify economies away from just oil, boost financial inclusion.
Strategic moves.
Exactly. Plus, you've got a tech-savvy younger population, high disposable income in some places. It all creates strong demand for these slick, convenient digital services that fit a modern lifestyle.
Got it. Okay, finally, let's wrap up our regional tour with Africa. Valued at under $1 billion in 2021.
The smallest starting point.
Right, SAR $0.924 billion. Expected to hit just over $5 billion in 2025, but then soar to more than $133 billion by 2033, growing at over 50.5% CAGR.
So even from the smallest base, still that same powerful growth trajectory?
Exactly. Countries like Nigeria, South Africa showing strong potential. South Africa growing from about $333 million to over $51 billion.
Mm-hmm. And the potential across Africa is just immense. It kind of echoes what we saw in South America, doesn't it?
How so?
Well, given the, long success story of mobile money there and the fact that traditional banking hasn't reached everywhere, neobanks are just perfectly placed to bridge those gaps.
Right, another leapfrog opportunity.
Exactly. The growth is really driven by demand for accessible, user-friendly, cheap banking for a population that's digitizing incredibly fast, often skipping the need for lots of physical bank branches entirely.
Okay, wow. So let's try and unpack this a bit, bring it all together.
Yeah, let's synthesize.
What does all this actually mean for you listening and for the financial world overall?
Yeah.
We've just walked through projections showing, well, frankly, staggering growth. Neobanking across every single continent.
It's truly global.
North America, Asia Pacific, Europe, South America, Middle East, Africa.
Hmm.
These numbers, they really represent a fundamental shift, don't they, in how financial services are accessed, how they're delivered.
Absolutely.
Now, these numbers are incredibly positive, very bullish. But, with growth this fast, are there potential roadblocks? Any challenges we should maybe keep in mind? What are the biggest headwinds neobanks might face?
That's an important question to ask. Because while the growth is undeniable, it's not necessarily a perfectly smooth ride, right?
Yeah.
Regulation's a big one. Operating across all these different countries means dealing with complex, changing rules everywhere.
Yeah, it must be tricky.
Definitely. Then there's competition. Traditional banks aren't just standing still, they're also pouring money into digital transformation.
Sure.
And things like scalability, achieving profitability. Often neobanks focus on growth first, profit later, and just building genuine trust with customers who might still be used to walking into a branch. Those are all significant hurdles.
Okay.
But, what the data clearly shows is that the market demand for these agile digital-first solutions is just so strong right now that it's outweighing those challenges. It's what's driving this incredible trajectory we've been talking about.
Right. So the demand is pulling it forward despite the obstacles. And there you have it.
Yeah.
We've just navigated this incredible growth path of the global neobanking market, pulled out the specific figures, but maybe more importantly, the reasons behind them, the drivers highlighting this rapid expansion everywhere.
Mm-hmm.
Being informed about this trend, it isn't just, interesting trivia. It feels key to understanding the financial world today, whether you're a consumer, an investor, or just, curious about what's coming next.
Absolutely. So maybe a final thought for you to consider as you go about your day.
Yeah.
If neobanking really does continue on this path, hitting these kinds of numbers, what parts of your own financial life or maybe the habits of people you know might look completely different in, say, the next 10 years?
Mm-hmm.
Think about your digital wallet, your investment apps, maybe even how you'd open your next bank account. It feels like the future of finance isn't just coming. It's kind of already here, unfolding right now.
Welcome to the Deep Dive. We look at the forces really reshaping our world. And today we're diving into something that's, quietly changing how we handle our money. It's the rise of neobanking. This isn't just some passing trend. It feels like a pretty fundamental shift in personal finance. So our mission today is to pull out the key insights. We're using the ascendant world of neobanking and specifically research from cognitive market research to help you really get a handle on this.
Yeah, and what's interesting is how straightforward the basic idea is. Neobanks are just banking without branches. It's all digital, built for the phone, essentially. Yeah. And they've really hit on something, especially with millennials and Gen Z, people who expect things to be fast, easy to use, app-based.
It's a world away from queuing up in a bank.
Totally different.
Okay, so we're seeing this huge growth in digital-only banking. What's really pushing it? What are the main forces behind this boom right now?
Well, it's more than just convenience, though that's part of it. There's been a big, almost fundamental shift in demand towards digital-only options.
Okay.
We've seen data showing a real jump in people choosing these banks, particularly after the pandemic.
Right.
It stopped being just a sort of, natural digital evolution. COVID kind of made virtual banking feel necessary for a lot of people, not just nice to have. It really sped things up.
So demand's a big piece. What about the banks themselves? How can they offer lower fees and better rates? Where's that advantage coming from?
That's down to their core business model. It's fundamentally different.
How so?
By getting rid of physical branches entirely and all the costs that come with them. Rent, staff, utilities. They just operate much, much leaner.
Okay, so the cost structure is just way lower.
Exactly. And those savings, they can pass them back to you, the customer. So you see lower fees, often genuinely better interest rates, maybe better currency exchange rates too.
Right.
It's just a more efficient setup. And that's attractive not just for users trying to save money, but also for the fintech startups themselves.
Yep.
It lets them scale up faster, without needing massive investment in property.
And it feels like it's not just customers and companies driving this. Is there official support helping things along too, from governments maybe?
Absolutely. That's a really critical piece. Government support and financial inclusion initiatives are playing a big part.
Yeah.
You've got regulatory bodies actually issuing specific digital banking licenses now.
Mm.
And importantly, they're creating these things called sandbox environments.
Sandboxes. What does that mean in practice?
Think of them like controlled test areas. New companies can try out financial products, new services, but with maybe slightly relaxed rules initially within that defined space.
Ah, so it lowers the barrier to entry.
Massively. It helps speed up innovation because companies aren't facing the full weight of regulation from day one on a brand new idea.
That sounds like a huge boost for newcomers. And does that tie into reaching more people, like people who maybe didn't have great banking access before?
Yes, definitely. Because these sandboxes help innovators get moving faster, and because their whole model is low-cost digital delivery,
Right.
neobanks are actually quite well positioned to reach people traditional banks maybe struggled with. Think unbanked populations or people in rural areas. It genuinely helps broaden financial access.
Okay, so we've got strong demand, a lean business model, and some regulatory help pushing things forward. Sounds pretty good. But what are the roadblocks? What are the big challenges neobanks are facing?
Well, one of the major ones, especially for banks wanting to grow internationally, is dealing with regulation, or rather, the lack of consistency.
How do you mean?
Digital banking rules, they just vary a lot, country to country, sometimes even region to region. So you end up with this patchwork of different licensing requirements.
Okay, so trying to expand must be complicated.
It can be, yeah. It can slow down expansion plans, definitely. And it adds risk to their operations, especially if they're trying to work across borders. It's not straightforward.
And then there's the fact they're entirely online. Security must be, well, everything. It does make you stop and think, right? People used to worry about losing a physical bank book. Now it's phishing scams and data breaches.
It's a huge focus
Mm-hmm.
and a constant challenge.
How do they build trust when they're facing those kinds of threats?
They have to invest continuously and heavily in cybersecurity. It's not just about preventing attacks, but also about complying with really strict data protection laws like GDPR in Europe or CCPA in California.
Right, those rules about personal data.
Exactly. And meeting those standards, keeping everything secure, it takes significant ongoing investment, which, can be a real burden, especially if you're a smaller neobank just starting out.
Okay.
And that ties into another hurdle, just basic customer trust and brand recognition.
You mean people still trust the old banks with the physical buildings more?
To some extent, yes. There's still this lingering idea that a big, solid building equals financial stability. It's been around for generations.
So the neobanks, being newer and without that physical presence.
They just have to work harder. They need to really prove their reliability day in, day out, and offer absolutely top-notch customer service to win people over and overcome that sort of initial skepticism. They're building trust from the ground up in a way.
Okay, so challenges are definitely there. But let's switch gears a bit. What about the future? What are the exciting trends shaping where neobanking is going next?
Well, one really interesting trend is how they're moving into very specific niches, targeting particular customer segments.
Like who?
Think freelancers, people working in the gig economy, small businesses, SMEs even, like teenagers needing their first account.
So not trying to be everything to everyone, but focusing.
Exactly. And they're building specific tools for these groups, things like instant invoicing for freelancers or special savings pots or budgeting apps designed for small business cash flow. They're identifying underserved markets and tailoring services just for them.
And the tech behind that must be getting pretty advanced. You hear a lot about AI and machine learning these days.
Oh, absolutely. That's another huge trend. The integration of more advanced tech, AI, machine learning, predictive analytics, it's all becoming central.
How are they actually using it?
In loads of ways.
Yeah.
Offering personalized financial advice based on your spending, getting much better at spotting fraud, monitoring transactions in real time, even using chatbots for automated customer service.
So it makes the service better, smarter.
Yeah, fundamentally, it enhances the user experience, makes it feel more tailored, more secure, and that helps build loyalty, which is crucial when there's so much competition.
Okay, niches, advanced tech. What else?
The other big thing is partnerships, strategic partnerships.
Right. You see that a lot now, teaming up with other companies.
Yeah, alliances with other fintechs, with payment platforms like Stripe or PayPal, insurance tech companies, even big tech giants sometimes.
So what's the goal there? Why partner up? Is it just about getting bigger?
It's more about broadening what they can offer. It allows them to quickly add features they might not build themselves. Think buy now, pay later options integrated into the app,
Oh, okay.
or tools for stock trading, or maybe even offering access to cryptocurrency wallets. It's about becoming less of just a bank account and more of a sort of all-in-one digital financial hub.
Like a financial ecosystem all in one app.
Exactly, that's the idea.
So wrapping things up for today's deep dive, what we've seen is, well, a sector really taking off. Neobanking is clearly on this steep upward curve, really shaking up finance globally with its innovation and reach.
That's right. It's definitely poised for more growth, no question. But as we talked about, it's got to navigate some tricky waters, the complex regulations, the ever-present cybersecurity threats, and still work on building that deep customer trust to keep the momentum going.
So thinking about all this, the rise of these digital-first banks, it really makes you wonder, doesn't it? How might our whole idea of what is a bank keep changing in the next few years? And, maybe more importantly, what does that mean for your own financial choices? Something to chew on as this landscape keeps evolving.